First thing I would say is, why did the tariffs not make such a big difference in the economic outlook? Well, you have these offsets in fiscal spending, but also the tariff rate that's been observed has been much lower than what they're trying to achieve. The tariff rate now has gone from 2.4 to about 10% observed, probably 16 to 18%, which is the effective rate, but they haven't been able to implement this that quickly. And the Supreme Court looks, in my opinion, like they will rule the use of emergency powers as illegal. The other thing I would say is that there have been a lot of exemptions. So if you take a look at Brazil, 42% of exports are exempted, 700 exemptions. USMCA is 85% of exports. So we have not seen the devastating impact that many people thought would occur from the tariffs. But we've seen this big shift in trading patterns. That's where we've seen actually some very significant changes. So China's share of GDP has not gone down. We're not seeing de-globalization, but we're seeing a huge decline in the exports to the U.S. and a big increase to the emerging markets countries. And you can really see that in the charts here. You can also see, though, that for FDI flows, the U.S. still is the dominant actor for Latin America. Remittances are still from the United States as well. But what we are seeing is that the emerging markets dependency in China has become even greater at this stage. And we can also see that public opinion has been changing. There are now more countries in the world that look at China favorably compared to the United States. If you look at the latest data that comes out of the Pew Research Center, and there's far more concerns now if you look at how the world is looking at global risks on false information online that wasn't even a category a couple of years ago, and also on just the global economic risk and uncertainty that this has generated, and less faith in the United States institutions here. So, has Trump been able to get money to return to the U.S.? Well, a lot of people say, how do you track the Trump numbers? So this is what's on the White House website. With each trade agreement, he has actually asked for investment flows. So he reports $8.8 trillion. I'm sorry, some of these charts are not coming up that clearly. Now, I showed this to somebody at the White House. They're like, oh, no, Joyce, that's wrong. It's $19 trillion. I said, oh, of course, 80% of U.S. GDP has come in 10 months of the year. How could I be so far off on my estoy? And also, it's what you have posted on the White House website. But let's try to break this down in a more granular way. What we have seen is that if you look at the U.S. Investment overseas, it's actually down 14% in the first half of the year compared to the first half of 2024. So it's a 14% decline. If you look at investment flows coming into the U.S. in the first half of the year, including from Latin America, the emerging markets countries, except for China, I mean, if you look at advanced Asia, it's up about 100%. That number is about $400 billion. It's not the $1.2 trillion you're hearing from the Trump administration. And that is like a move that's from like 250 to 400, 200 to 400 billion. So it's a 100% increase. It's not 8.8 trillion. It's not 19 trillion. It's not 1.2 trillion. But we are seeing that the flows are coming to the U.S. from emerging markets. And in emerging markets, we have not seen an increase in the FDI flows since about 2022. So there is a trick. The real point I would make is it hasn't been devastating for growth. It hasn't been devastating for the overall economic macro performance, but a real shift in the trade and investment patterns.